All right, welcome viewers to our second episode of Making Sense. Making Sense is a new video series that the bank is doing where we really break down banking and talk about it sans jargon. So in real terms. My name is Hannah Willis. I am the marketing director here at the bank. With me today, I have Elise Popelka. She is AVP commercial banker, and she offices out of the Duluth location where Chad and Dan also office, and that is by the Super One and Ace Hardware, 1314 East Superior Street. So Elise, thank you for joining me.
Yeah, thank you for having me.
So what we're going to cover today are the different types of business loans. But before we get started, I want to introduce the jar on the table. So this is our quote-unquote swear jar, but we're calling it our jargon jar. So if you use terms that are a little too bank-ish, I'm going to stop you, and you're going to have to put a quarter in and then define what the term actually means. So or if you use an acronym, so let's say you use like APY and nobody knows what that means, I'll stop you and you're going to have to pay money into the jargon jar.
Fair enough.
In future episodes, we will expect people to have money, but I figured you did not have change in your pockets, so I'm providing you with some money.
Thank you.
All right, so we're ready to get started?
Yes,
Okay.
absolutely.
All right. It seems like there's a lot of different loans out there, and I kind of want to break down what the different options are for people. So let's talk about the most common one, which I believe is a term loan. So let's kind of talk about a term loan. What are they normally used for?
A term loan is typically used to finance fixed assets, such as equipment, real estate, things like that.
Okay.
Obviously, there's outliers and there's other purposes for term loans, and that's very subjective for our borrowers and why you work closely with a commercial banker. But typically, a term loan is to purchase those fixed assets, such as equipment or real estate.
Okay. How does a business term loan work? Big picture.
So a term loan, basically you get a lump sum of money, and then you pay it typically monthly, principal and interest over a term of the loan.
So once you get approved for the loan, like that whole amount of money is just put into an account?
Yes, it could be put into your NBC account if you have one, or we would issue a cashier's check as well. So there's different ways for the funds to be advanced to you.
Yep. Is there a max limit on a term loan?
Well, we do have our lending limit, which was $22.5 million as of September last year. But really the set limit is based on the collateral being pledged or purchased often, and then the borrower's creditworthiness.
Okay. Lending limit.
Yes.
What does that mean?
That is the aggregate amount you could borrow with NBC.
Okay. And you might not know this, but I'm just curious, who sets that limit? Like, where does this $22.5 million threshold come from?
It's calculated based on the bank's capital and various parameters set by the OCC.
Okay. Ooh, the OCC.
Oh.
Do we know?
I don't even know what the official.
Office of the Comptroller or something like that.
I don't know what the official. Can we Google it?
Whatever. Not our department.
I'm sorry.
I think it's like office. Something about like
bad. We should know.
Controller. Maybe our film guy will help us out.
Office of the Comptroller of the Currency.
Okay. There we go.
You learn something new.
Yeah.
Okay. Type of rate. What kind of rate is normally associated with a term loan?
Oftentimes, a term loan has a fixed interest rate, meaning it will not change over the duration of the loan. There's always outliers in the commercial world. They could be variable.
Okay.
But typically, that fixed.
Can you refinance a loan? Like a loan rate? Like you refinance like a house?
Absolutely.
Okay.
Yep. And it's subject to market rates
Okay.
and obviously the individual borrowers as well.
Yeah. Let's move on. Lines of credit. What is a line of credit used for, and why would someone choose a line of credit over a term loan or any other type of loan?
Yeah. So a line of credit is most often used for a business for short-term working capital and cash flow needs. It's used for basically the daily operations of a business, the daily expenditures. That's very different than a term loan. A term loan is usually the duration is based on the useful life of the asset being pledged. A line of credit is typically and most often secured by all business assets or ABA of a business. We take a general blanket lien on that. And then it's also the amount of the line of credit is typically based on the cash flow ability of the business, the cash flow needs of the business, and their accounts receivable levels, inventory levels, and things like that. So it's very subjective to the individual business.
Would you say that lines of credit are typically lower in dollar amounts than like a term loan?
Often,
Okay.
yes. And then obviously there's the additional, I should add, a line of credit typically revolves, so the business can advance funds up to the approved limit, pay it down as cash flow allows, and re-advance as they need to.
Does this line of credit stay open, like ongoing, and you can just pay it off, or take the money, pay it off, take the money, pay it off, or is it good for like a certain amount of time?
Typically 1 year.
Okay.
And then that allows the bank to have a checkup with our customer, and we do an annual review and get annual financial information and just kind of reevaluate the business and the line of credit, and is often renewed on an annual basis if a business chooses to.
Okay. Real estate loans. Why would a business choose to take out a real estate loan?
Real estate loans are specific to purchasing, improving, refinancing real estate. It's obviously always involving the real estate portion.
So why would a business not just take out a term loan then? Like, what's specific to a real estate loan?
Well, real estate loans are often term loans secured by real estate or used for purpose of purchasing, improving, rehabbing real estate.
Okay. How do real estate loans work? And are there different kinds?
Yes. So a real estate loan, if we're going to advance it as a term loan, works very much like a term loan, but the collateral on that loan would be the real estate that's being pledged. There are different real estate products. And one is a line of credit secured by real estate, and that's often used for improving or new construction. If you do it as a line of credit, that line is usually available through the construction period, and it aligns with that construction timeline. The difference between a real estate line of credit, though, and a revolving line of credit used for working capital is that you can only advance up to the approved limit one time. You can't pay it down and re-advance on it.
What's the thought process or reasoning behind that?
Because it's used, your collateral is the improvements, is partially the improvements or the real estate that's being constructed. So you only want to advance funds that one time because that's what the collateral allows you to do.
Okay.
Typically, once you do a construction project and you're through the construction period, then you would often refinance that line of credit into a term loan and repay it over a fixed time.
Okay. What about a real estate hybrid loan? What is that?
Yep, absolutely. That's a combination of the line of credit single advance line of credit that I was just mentioning.
Yep.
But that line of credit then would automatically convert to a term loan where you would pay principal and interest over often 20 years or an amortized period. And those loans typically balloon at 5 years. So it would be amortized over that 20 years, but your term would be 5 years when you would refinance or renew the loan at that time. Those loans are typically set up when there's a defined construction timeline, and they are knowing that they're going to want to turn around and just term that amount out once construction is completed.
Okay. I am going to have you put a quarter in, and I want to talk about a balloon.
Yes.
What is that? Because it is not a common term besides the one that you bring to parties.
Yeah.
So what does it mean in banking?
Yeah, our commercial loans are often set up with a balloon payment. So, and it's typically has to do with borrowing term loans. So our term loans are amortized over the useful life of the asset. Real estate, 20 years is what we typically do.
Okay.
But the term of that loan would be 5 years. So you would originate a 5-year term loan that's amortized over 20 years,
Yep.
and we call that a balloon at 5 years.
Okay.
It's a much larger than normal payment due at the end of a loan term.
Okay. Okay, got it. Letter of credit. How does this work? And is a letter of credit actually a loan?
It's not a loan. It's more of a contractual promise to pay a vendor or another party that a business pays with their typical business operations.
Okay.
So a letter of credit, typically we issue letter of credits to borrowers we have an existing relationship with, and we are comfortable with the business, and they have adequate collateral to cover the letter of credit amount. But basically, the letter of credit would be put in place for a specific amount. Usually, it's based on the contract that business has with their vendor, and it's a promise that the vendor will be paid as contractually agreed.
Okay. So does the borrower need the letter of credit, or is the person they're working with requiring the letter of credit?
Typically, the vendor or the person they're working with requires the letter of credit
From the bank.
from our borrower issued by us.
Okay. Okay.
NBC is essentially promising that our borrower will make the payment as agreed.
Right. And if they did not, then we would?
They could draw on the letter
Got it.
itself up
Okay.
to the approved amount.
Okay. Are these common?
They are.
Okay.
I mean, they're not as common as term loans, lines of credits, but they are fairly common within our business realm. So,
Are they more common in certain industries?
yeah, they are. Construction and businesses, contractors. Sometimes cities require letters of credits for a certain construction project. Trucking industries are often required to have them for in different bonding needs, insurance bonding needs.
All right, I'm gonna trip myself up here a little bit, and I'm gonna use an acronym. Let's talk about the SBA and a little bit about what kind of loans the SBA does, and generally who is the SBA? What is the SBA?
Yeah, the SBA is the.
Oh, sorry, one thing. I also know that this might be not something you're super comfortable with, so please feel free to use your notes. I do not expect you to have all of this in your head or know all these numbers or percents or whatever. So please use your notes if you need to.
Thank you. Yeah. So first of all, we'll define the SBA. It's the Small Business Administration. Wonderful resources for businesses. They offer loans that have partial guarantees from the Small Business Administration, supporting a lender like NBC in a deal, maybe a more complex deal or maybe not a traditional borrower that we would borrow to. So They just provide essentially a little bit more comfort for us and our lending and our deal that we're working on. So the SBA provides many different loan programs. Usually it's based on the purpose of the loan and the borrowing ability of the person who is borrowing the funds. The most common SBA loan is the 7A loan. There's many purposes that can be used for this loan, and these loans are up to $5 million. Usually they're not that amount, but they can go up that high. And the terms for these loans, if they are for real estate, purchasing real estate, improving real estate, can go up to 25 years. And then for equipment and other purposes, usually up to 10 years.
So if we wanted to work with the SBA or, have them kind of guarantee a loan or, back the loan, who do you contact? Call up the SBA, or are there SBA liaisons, or how does it work? It seems like it's such this overarching body. Who do you actually talk to?
Yep. I always recommend talking to your NBC commercial banker first, or your other finance professionals.
Yep.
But NBC is an approved SBA lender, and we work with certified business development centers like the Minnesota Business Finance Corp to facilitate that and to ensure our SBA guarantee is valid.
Okay. Got it. Let's talk a little bit about microloans, a term that when I was first learning about all this business stuff that we were going to talk about, I was like, I've never heard that term.
Yeah.
What's a microloan?
Yeah, a microloan is another type of loan offered through the SBA. The SBA actually advances those funds. I'm sorry. The SBA facilitates these loan programs and funds the loans, but they're often originated through a third-party approved community partner like the Entrepreneur Fund.
Okay.
These microloans are up to $50,000.
Okay.
They are typically at a higher interest rate and can be lent to maybe some non-traditional borrowers. It may be a great option for someone maybe who doesn't have the history of a business, or maybe they're thinking of starting something, or they don't quite qualify for traditional bank financing. The Entrepreneur Fund could be approached, or another community partner like them, and instead of them not having access to financing, this could be another way for them to get funds.
And would the interest rate likely just be a little bit higher because of the risk?
Exactly.
Okay.
They're just non-traditional.
Yep. WHEDA. And I'm going to put another quarter in, but I don't know how to ask this question without just saying it. So what is WHEDA and what do they offer?
Yeah, WHEDA is another wonderful community resource for our business owners.
Can you tell us what it stands for?
Yeah, it's the Wisconsin Housing and Economic Development Authority. They not only provide lending programs and even guarantees like the SBA does, but again, phenomenal resources for existing businesses, someone who wants to start a new business. It's another great website, and there's contacts there that would be happy to help.
I'm sorry, you said it was the Wisconsin Housing?
Yes, Wisconsin Housing and Economic Development Authority. This is specific to Wisconsin businesses.
Okay. So you need to have your business established in Wisconsin.
Correct.
Got it. Okay, cool. Let's talk a little bit about small businesses. Are there specific loan options for your mom and pop shops, or even a startup?
I wouldn't say specific. I would say it's very subjective based on the owners of the new business, what they're trying to do, what their capital needs are, or what they are looking for in funds to start the business. There's always different things to consider. You could contact your NBC banker to discuss those, what you want, what you need, what your business needs, and what ideally you want to see happen. There's various different loans that can facilitate the startup of a business. I mean, we could do an SBA loan or
Okay.
one of those microloans if your capital needs aren't, over that $50,000
Yeah.
threshold.
So like an SBA loan would fall under like a small business loan. A small business loan isn't an actual product.
The SBA
It's just like a
is
category.
Exactly.
Okay.
And the SBA is specifically designed for small businesses.
Okay. What about small business grants? What is that?
Yeah. A small business grant is essentially a grant. They're going to give you money for specific use, and it's based off of different requirements. There's federal grants, there's state grants, there's county grants, there's city grants. They're always changing, and the eligibility for the various grants are different. So if you see grants or you read something on a grant and you have more questions on it, that's a great time to touch base with your banker.
And a grant is something you do not have to pay back.
Exactly.
Okay,
It
got it.
is, as long as you meet the certain requirements for the grant.
Okay.
Yep.
I know you talked about a few local resources. What else? So we talked about the WHEDA, the Entrepreneur Fund,
Northland Foundation.
Are there any others that? The SBDC?
That's the small business.
Okay.
Those are the small business development centers, and
Okay.
those are on the state level. So you would contact, if you had a Wisconsin business, you would contact your Wisconsin. You would contact your Wisconsin Small Business Development Center, and vice versa for Minnesota.
But the bank has relationships with most of
Absolutely,
these
and
partners.
contacts and names we can give you to
Yeah.
reach out to.
Yeah.
Entrepreneur Fund, Northland Foundation I just want to mention that they're another great resource for new businesses or even existing businesses. I mean, they will help you create a business plan.
Yeah.
They will help you create your projections. They will stress test those projections, and they know what the bank's looking for. So if you don't know where to turn to, that is a wonderful place to start.
That's good to know. Last question. Any other tangible takeaways any advice that you would give businesses thinking about starting the loan process?
It can be intimidating, right?
It's intimidating.
It's scary.
Yes.
If you don't know where to start at the Entrepreneur Fund. Start with your commercial banker.
Yeah.
If you don't have a contact with us, I mean, our website, you can pick a face off our website and give us a call.
Yep.
We are happy to help, always happy to have conversations. It can be very, very intimidating. You just need to start. You just need to start those conversations one step at a time, and we will help you through the process as much as we can.
I love that. Like, you don't expect people to come in and know all of this stuff.
Absolutely
Like,
not.
that's why you're here.
100%.
Awesome. Okay, well, thank you.
Yeah, thank you
For joining me, and that wraps up our second episode. So thank you for being with us, and until next time.